All right, a very good morning to you. Welcome to this very segment of the Eagles Morning Risers Breakfast Show. How you feeling? I'm trusting that you are good. I mean, we're gearing up towards the Yuletide season, which is just around the corner, I might add. And I'm sure that you probably have an idea of how you would be spending this Christmas. But would there be a Christmas if we are not able to talk about social evil? Doubt that. And that's why this very hour is earmarked for the Eagles Outlook, where we look into political talk as well as current affairs conversation for today. My name is Utuak Daniel, and yes, we'll be looking into something that is of particular tax reforms, what you need to know, right? There's been a lot of bickering as regards what the new tax reforms come 2026 will be about. And quite a number of people have begun to run helter-skelter in their minds out of panic, out of fear. And this is becoming chaotic. And it is only very natural for us to look into these issues. Right now, the Nigerian government has introduced new tax laws that will take effect on January 1 of 2026. So the reforms aim to simplify tax administration, enhance compliance, promote revenue growth. These are the reforms. This is what the reforms aims to achieve, right? First of all, simplify tax administration, enhance compliance, and promote revenue growth. So the changes include a reduction in company income tax from 30% to 25%, exemption means the removal of small businesses with annual turnover below 50 million naira from income tax, and introduce a 4% development levy on business profits. All right, now let's just break it down a little bit more. But before we do so, let me also put it out there that the Nigerian tax system has also undergone several changes over the years. If you recall, in 1996, the company income tax rate was set at 30%. The new reforms are designed to modernize Nigeria's tax system. It is designed to reduce burdens on small businesses and ordinary citizens. It is also designed to become like a shift, or to shift obligations toward high earners and large businesses. So for those of you collecting big pay salaries and all of that, or your organization and you're earning, in fat checks, you're making turnovers and fat checks, you are the ones who will indeed be getting the brunt of the new tax reforms right there. And this is not also to witch hunt anyone. I mean, it's not to witch hunt. It's also the federal government's way of ensuring that there is a simplification when it comes to tax administration. There is also compliance. I mean, it's been discovered that quite a number of persons have not been complying. Even organizations have not been complying to the tax systems. And also a way of promoting revenue growth. You know, these are the three focal points of this January 1st, 2026 new tax reforms that should be coming up. But just before we get our guest into the discourse this morning, right? Who is in the person of Mr. Wole Joshua. He's a fellow of the Institute of Chartered Accountants, ICANN, to open our eyes to the several aspects of these tax reforms that would be set on implementation scale January 1 of 2026. Just before we get with him, let me try to see how I can also simplify it some more. I mean, imagine you're buying a plate of jollof rice and you're happy to pay for it because it is quite delicious, right? Taxes are like paying for things we use in our country, like roads, schools, hospitals. These are very essential things that we pay for. More like I'm enjoying it, so I'm paying a tax to show that, yes, I really love it. This innovation, I love it. I am contented with it. It's my way of saying, well done, keep doing more. Supporting you, let's just do more. Let's work together. Now, before, taxes were very complicated. Some people didn't even pay their fair share. Now the government is making the changes to make it simpler and fairer. So what is changing precisely? You're asking the question, you're afraid before? Well, you don't have to be afraid any longer. What's changing in this time? There is less tax for companies. So big companies used to pay 30% tax, but now they'll pay 25% starting January 1 of 2026. No tax on essential like food, medicine, school fees, electricity, they're all now tax-free. Now, small businesses exempted. Businesses earning 50 million naira or less per year don't pay income tax. I should say that again in case some of these tax bodies begin to come to harass you. Businesses earning 50 million naira or less per year don't pay income tax, right? Now, progressive tax, this one, you'll pay more tax if you earn more money. So it's progressive as you're progressing in life. In terms of your finances, you are expected to pay more taxes, right? To whom much is given, they say, much is expected. Now, who pays the tax? Individuals earning above 800,000 naira per year. So if all of your income, salaries, and everything put together is above 800,000 naira per year, okay, you would be paying some tax. Companies with turnover above 50 million naira, you'll be paying tax. Now, who doesn't pay tax? Individuals earning 800,000 naira or less per year, they don't pay tax. Small businesses with turnover of 50 million naira or less, they don't pay tax. Right? So, for example, let's say one John earns 50,000 naira per month, right? That's about 600,000 naira a year. He doesn't pay tax. Jane earns 100,000 naira per month. That's about, 1.2 million naira, yeah, per year. She pays tax on 400,000 naira. That is, if you minus 800,000 naira from 1.2 million naira, right? The 400, yeah, she pays taxes on that one. All right, so what you need to do, get a tax identification number, update your employer or bank with your TIN, keep records of your income and expenses. Remember that the government isn't taking money from your accounts without permission. Tax is actually helping build our country, right? But has tax been helping to build our country over the years? Is it helping now? Well, we will find out as we connect with our guest, who is in the person of Mr. Wole Joshua. He will be adding his voice loudly and clearly in the arena of the discourse this morning as we go conversational. All right? We're looking at the tax 2026 tax reforms now that is supposed to begin January 1 of 2026. Hello. Good morning to you, Mr. Wole.
Hello, good morning.
All right, feels good to hear your voice this morning, though. Right now, you are a seasoned accountant, a fellow of the Institute of Chartered Accountant ICANN. I mean, as a seasoned accountant, I'm sure you're likely aware of the significant changes Nigeria's tax system is undergoing. Now, the new tax laws effective January 1 of 2026 is aiming to simplify tax administration, enhance compliance, and promote revenue growth. There are some key changes that has been put in there. I mean, one of such will be the corporate tax cut from 30% to 25% for medium and large firms, VAT exemptions on essential items like food, medical services, and education. Small businesses are now exempted from income tax for annual turnover below 50 million naira. Mandatory e-invoicing, I beg your pardon, for VAT registered businesses, increase capital gains tax from 10% to 30% for companies. There are some fears that Nigerians have, and I would like for you to make clear some of these assumptions and fears. One of such would be the fact that, our salaries, we that don't earn up to 800,000 naira a year, they will tax us so much. VAT has increased. Quite a number of people are having different misconceptions about this. Please help us understand it and also help us see the gains and how it has changed from the previous tax system.
Thank you very much. I appreciate the opportunity to add my voice to the discourse on ground.
Right.
Everybody is aware currently that the country is undergoing a kind of tax reform effective from January 1st, 2026. And there are a lot of misconceptions about this. Tax has been there. Well, what would change, or what is likely change, will be the transparency, and bringing more people into TaxNet and increasing the tax base. What I mean by increasing the tax base is that what you used to enjoy as eating from the TaxNet would be exposed to more exposed to TaxNet this time around, and it will expose us. When I mean us, I mean as a company and as an individual, to more tax scrutiny. So when this happens, what you have as your salary, which initially was taxed based on the old tax law, will be taxed at the normal rate, even a little lower than what it used to be. But now this time around, what you have as your side income will now be more exposed to tax, meaning that you are paying more than what you used to pay. Not that you are paying more than what you ought to have paid legally, but you are paying more because you are more exposed. You are more exposed through the instrumentality of technology. Instrumentality of technology has to do with the banking sector. We have to do with your NIN, your BVN, and many other sources of income, which includes the tax platform and the spin-off information, like Mr. A paying tax on his own transaction, while Mr. B did not pay on the transactions binding the two of them together. Mr. B will be exposed to what he has initially been hiding. So it's the new tax law is bringing more information to tax desk than before. So that is the current situation, and some little increase, like that of capital gain tax. You agree with me that the VAT did not increase. It even excludes some items from payment of VAT, which includes petrol, diesel, and CNG, and many other items that are contained in the VAT exemption order. So we have that, and we have the PIT. When we have the PIT, is trying to exempt household earning lesser income from tax. So as much as the tax law came to reduce burden on those who have been paying tax in the right manner, it's coming to expose those who have not been paying the right taxes. And we have many changes to the current tax law. It's harmonizing the tax payables, like PIT, like CIT, like CGT, capital gain tax, income tax, and personal income tax are now merged to one national Nigerian Tax Act and the administration equally match to one other act, and then it's giving room for arbitration, which means that if you are not comfortable with what you have been assessed to pay, you can opt for arbitration process rather than going to court through the joint tax board alone. If the arbitration process is not fruitful, then you can now opt for the joint tax board.
Is that a good idea? Is that a good idea?
Yes, it's a good idea because litigation has been a weakness of our tax system over the years. Because instead of throwing the part of arguing disputes at the court of law, we choose the simple part of agreeing and let the sleeping dog lies. So this time around, I believe that the adjudication process and the litigation process put in place will be enough to bring the beauty out of the act, to set aside some items that infringe on people's rights, and then uphold some items that speaks to the good administration of taxes. So that is a good one from our own part. But the most important thing is that this tax will dwell on the wings of technology in achieving revenue into the purse of government. So we are now likely exposed to how do we manage and ensure that these taxes are used for the better good of the citizenry, because that as it may, this policy might have been copied to tilt towards the global best practices. If we are having global best practices, we should have global best practices in other sides of human existence, which has to do with the social life, because I may find it difficult to transfer to pay money for maybe social welfare of one or two persons, because I may be avoiding payment of taxes. So if I'm exposed to payment of taxes because I'm catering for social benefit of some group of persons, the group of persons should be covered by the government processes of social safety nets, of pension fund administration, better pension fund administration, and many other things, provision of infrastructures and the likes. So we have the tax catering for releasing much money into the government purse, availing government much money to spend. In addition with the floating of naira, removal of subsidy, and then many other sources that are available to government. If these are in place, I believe that government will be able to cover their social expenditure and possibly the security expenditure, then reducing the burden of loan on the government of the day. The new tax law is a good one, and whether we like it or not, is coming to stay. All we need to do is to fine tune it to ensure that it is staying for the common good of the nation, from the government flank and from the citizenry flank, because government is there to use tax for the common benefit of the nation. So the technology has been in place to assist the government, and this technology has to do with the banking sector technology and the tax administration technology, part of which is the e-invoicing, part of which is the NIN, which is the
TIN.
The TIN itself.
Talk to us about the TIN. Talk to us about the TIN. What exactly is it about? Why is it very necessary in this entire process?
TIN, which is TIN, tax identification number, is just a number that links an entity, whether biological or artificial, to the government, whether state or federal government or the local government, in order to administer the right tax. So TIN is for tax purpose. The number that gives you relationship with the federal government or your state government is the tax identification number.
Okay.
You'll be identified for that, and you'll be taxed based on that, and your history will be held by the tax identification number. So you will be dealt with in terms of tax using the TIN, and it is compulsory for every entity, whether biological or artificial, to register with the government through that TIN. And that TIN will now give you access to the portal of JTB, which has to do with Joint Tax Board, which has to do with the state administration, and the portal of Nigeria Revenue Service, which formerly Federal Inland Revenue Service, which has to do with the companies and other agencies where their taxes will be administered. We have two taxes, which is the transaction taxes and the profit taxes. Even while you are not exposed to the tax on your profit, whether you are an NGO or you are an agency, you are exposed to transaction taxes, which has to do with the VAT, withholding tax, and possibly stamp duty and others. And then those that are incidental to your businesses, which has to do with the petroleum profit tax, the capital gain tax if you dispose of any assets. So that tax identification number is there. Then you will be exempted if you, as a biological entity, you have a lower income, an income lower than 800, or if you are paying an additional 500 naira, not more than 500,000 naira rent, you'll be exempted from that. Is 800 plus 500, that is 1,300,000 naira. You'll be exempt. That particular portion will be exempted from payment of taxes. Then if you are a small company is defined by whether it's earning turnover up to 100 million naira. That as it may, your asset must not be more than 250 million naira. That as it may, you must not be a professional, a company rendering professional services. So if you can fulfill all these three criteria, you will be exempted from payment of taxes. So the tax rate will be either zero or a graduating table for persons, or 30% for entities, for registered entities registered with the Corporate Affairs Commission. If you are registered with the Corporate Affairs Commission, is either you pay 0% as a small company, or you pay 30% as a big company. For a person, the tax law has stipulated what is to be paid, which is 0% on the first 800 or plus 500,000 naira rent, and then the next 2.2 million we pay 15%. Then the next 9 million will be charged at 18%. The next 13 million will be charged at 21%, and the next 25 million will be charged at 23%. While if you earn above 50 million, you'll be charged 25%. So you agree with me that this is a graduating table that seeks to take more from the rich and take less from the poor. That is how a good tax law is being structured, to leave more disposable income in the hands of the poor, to leave more disposable income in the hands of low income earner rather than the poor. The poor will be taxed zero, while the low income earner will be taxed at a lesser rate, while the high network individual will be taxed at 25% and above. So it depends on what you do. And then we have the withholding tax part, which has to do with the transaction element, and we have the VAT part, which has to do with the value added tax element. What this new tax law is bringing to table is that you may seek refund on your VAT, on your excess value added tax paid. What may lead to that is that value added tax is input and is based on input and output mechanism. If you are buying and paying more VAT on what you are buying, you may have to net it off on what you are selling. So you pay on that profit you make on your immediate sales. And then when you are buying assets, when you are doing some of your administrative expenses, you might have paid VAT. So accumulation of this VAT paid to your vendors might be higher than what you have sold. So you may seek a refund from the Nigeria Revenue Service in respect of the excess VAT, like you may seek refund for excess withholding tax, that is withholding tax credit note, which has been deducted on you. So it's a good one for whoever is seeking a refund mechanism on either VAT or withholding tax element of it. Right. So if you are doing that, you will be tax audited, because you will have to you have to open your books so that we see that you are transparent and you are paying right. If all things being equal, you will be refunded your monies within 90 days. So another great one on the side of the Nigeria, on the side of the law, is that you may want to be subjected to the administration of the NRS, Nigeria Revenue Service, which states that you will self-assess yourself first. You will first obtain your TIN from the service, whether the state IRS or the Federal Inland Revenue Service, which is the Nigeria Revenue Service, which is now called the Nigeria Revenue Service. Yeah. You obtain your TIN. After obtaining your TIN, you self-assess yourself annually. You submit your assessment of what you made as an income. What you made as an income as a company will go to the national, which is Nigeria Revenue Service. Okay. What you make as an income as an individual will go to the state, which is IRS, FCT IRS, if you are referring to the FCT. All this will be scrutinized, and then you know that you might be more exposed. Your bank account might be exposed to scrutiny, or you may be exposed to other intelligent information. So you may not want to declare a fake information rather than to plan your tax. So now Nigeria is moving from tax evasion to tax planning. So you plan your tax rather than evading it. So that's what it seeks to do. So, and that's what the new Nigerian tax law seeks to achieve, commencing from January to going forward.
All right, so taxing people, those who are earning more, right? So you earn more, you are taxable, right? You pay more. Okay, that's it. And there's a threshold already, 800,000 naira annually. If you are within or below 800,000 naira, you are not taxable, right? But if you're earning 800,000 naira and above every year, you are taxable. All right? Okay. Anyways, let's just go out now, head out, pay some bills. We will come back, open the phone line so that family members can also add their, voice in the discourse, and we will take it off from there, right? It is still Eagles Morning Rises Breakfast Show, and yes, we're still having a conversation on matters that concern taxation, the 2016 taxation, 2026, I beg your pardon. Quite a number of people already hammering on that. They are already screaming, and they are really scared about what it holds, or what holds for 2026 with a new tax system regime. We will be right back in a short bit. Don't go away.
Eagles 102.3 Abuja.
The African University of Science and Technology, Abuja, AUST, announces that admissions are now open for application into our remedial and A-level JUPEP programs for 100-level and direct 200-level admission, professional diplomas in data science, artificial intelligence, Cisco and AWARE certification, project management, construction management, and more, undergraduate degrees in civil engineering, mechanical engineering, petroleum and energy resources engineering, material and metallurgical engineering, software engineering, computer science, business administration, and accounting, postgraduate programs, MSc, and PhD in cutting-edge fields like aerospace engineering, space physics, systems engineering, geoinformatics and GIS, pure and applied mathematics, computer science, theoretical and applied physics, material science and engineering, petroleum and energy resources engineering, and MSc only in public policy, public administration, management of information technology, applied statistics, and mathematical modeling. Call 003-540-3714 or 006-272-9310 or visit www.aust.edu.ng.
Things they happen for our community,
Now I can recoup back all the money I have spent on this annoying family.
Hey, yeah. That woman own don't finish.
My dear, let's go and greet them, okay?
Join Media Coalition and Awareness to hold trafficking, MICAS, on I Wish I Knew radio drama and program every Saturday at 10 a.m. on Eagles 102.3 FM Abuja. Join us to kick human trafficking out of our society. I Wish I Knew radio drama and program is brought to you by MICAS and funded by the Ministry of Foreign Affairs of Denmark.
This one now Pampa, this one now Elele. It never happened before. Magic season promo from Team Pumpy Concepts. Develop our care.
Now so, no ask us for Team Pumpy Concept. How we go do it? It could be like magic. Only change us with some of our 60% discount on all our products. We call them Magic Season promo. Now you go take the lion's share. Hey, people don't rush up everywhere. Our land where they Kapsana, Gusape, Akugude, plus include your Chara land where we get for you. Now small time now. This Ogundia wolf go finish. We don't kickstart time from Wednesday, December 10. Go reach January 7, 2026 New Year. No dollar 7 for this festive season. This now magical way to wrap up the year. Come we office where day number 12 from Morofia Street. Who say to Abuja? Tell you why now 090-5454-5468 080-5288-8007 or 090-7917-7774. T Pumpy Concepts, developer that cares.
Welcome back and thank you for staying with us. It is still Eagles Outlook and we are talking politics and current affairs, but basically we're looking into the new tax system in Nigeria, a simple guide, what you need to know so that you don't go stressing your heart and your mind, thinking helter-skelter and probably losing sleep, right? And our guest has been a seasoned chartered accountant who is indeed very, very well informed in matters that concerns the tax laws, especially the one effective from January 1 of 2026, which is aimed at simplifying tax administration, enhancing compliance, and promoting revenue growth. Now, you can also add your voice in the discourse. If you have your questions, you have your fears, you have your concerns, you want to ask the professional now, here is your time to do so. The number would be, and the number that you should stick to only, would be 0907 353 0044 0907 35 and 3 0044. The producer says call the number once more, so I'm gonna give it to you again. 0907 353 0044. Right? Hello and good morning. Hello?
I'm calling from Cuba.
Sorry?
I'm Olatunji calling from Cuba.
Okay, Olatunji, welcome aboard. Talk to me, Olatunji. Go ahead.
Okay, Happy New Week.
Yes, my brother. Welcome to a brand new week. Talk to us.
Okay, I understand that we must have a system which is necessary. But I have an issue because it's not all our money that went. It is not all our money account. You account. So I want to say because that means it's only the service provider that will be targeted. And I want to understand, when there is increase in taxation of where or something, the manufacturers they increase in the price of their products, which also don't understand. So
Okay.
I want to ask, there is no money. So is it not the masses that will be complaining? That is my question.
Okay, so Olatunji, I'd like to get your question correctly. I mean, the line has been breaking, so I can barely really get a grasp of it. You might want to ask that question again. Yes, just hit the question on its head. On its head. Let's go.
Come over.
Yes, just a question. Just a question.
I said we must have a taxation which is truly and bona fide. But there is an issue because I see that not all our money account. But I noticed that it is the service from manufacturers of those things that the party or the citizens they buy daily, because when I increase in fuel or increase taxation, I believe that the increase in price of the manufacturers are other criteria they consume. And I want to say that we need no resort to what the market will be complaining, and we people the to parties.
Okay.
That is my thing.
Right, appreciate that one from you, Olatunji. I think what you're saying is that, hey, with this old tax, system and all of that, wouldn't it take us to a regime where manufacturers of goods will begin to put increments and say, okay, you know what, we earn above this threshold that the federal government has put, so we have to increase, the value for our goods, and that it still goes back to the masses who are still bearing the brunt of it. We're still the ones who will complain again about this tax system. The one way or the other, the masses are still paying for this tax one way or the other. Well, just before I get the professional at his voice, I'm talking about Wale Joshua. Let's go take a couple of messages right here and on here. This one is coming from Samuel from Kuje. Standing on existing protocols now, it says, please, I want to ask, what will the masses in the rural areas benefit from this tax reform? How sure are we that the people in authority will make proper use of the tax money for the benefit of all Nigerians? For me, bringing policy is not the problem, but proper implementation is the issue. All right, thanks, and have a fulfilled day. Thank you, Samuel. And the last that I'll be taking now, Yusuf, all the way from Wuse 2, says, good morning, UD and your guest. Good morning. It says a new tax law will pauperize the masses the more. It is complicated and difficult to understand, which makes it susceptible to fraud. The consultancy contracts already entered into have raised suspicion. The other time, Atiku Abubakar criticized the mode of appointment of Express Payment Solutions Limited as one of the platforms under its Treasury Single Account TSA revenue collection. Also, the MOU on tax collection this administration recently signed with France poses a grave threat to Nigeria's economic sovereignty and national security. Nigerians are already overtaxed, and we are not seeing the effect. The question is, where are all these monies going to? Have a nice day. All right, very, very quickly, if you can, Wale, please help us through some of these concerns.
Well, the voice I'll be adding to that is that, like it or not, Nigerians are now awakening to their rights. And when you are taking much from me, I should be interested in what you are using the much for. I know that there will be a lot of awareness and there will be a lot of money tracing. There will be a lot of budget monitoring in this, in respect to what government is using these particular funds to achieve. I'm talking about the policy development. I have a thought line which suggests that a strong system is better than a strong man. But when you have a strong man in power, a strong man implementing a strong policy will hand it over to a good system, a strong system, because a strong man implementing a good policy will not want to watch his own good policy to go down the drain. So I believe that the policy will be sustained as much as the political structure is still on ground. I know that a lot of monies will go from private sector to government sector to sustain many things, like the current insecurity, pursuit of insecurity that we have on ground, and possibly enhanced payment of salaries, and maybe contract payments. What we may likely have is a good infrastructure with a less value for human, a less purchasing power for household. And when you have less purchasing power for household, you may have a lot of poor persons within the environment. But this will stimulate hard working and will ensure that people work harder. Okay. And in terms of maybe prices will increase. Yeah. There is a kind of stability level when inflation setting. If you increase increase your price, I'm equally likely to increase my price until when things stabilize. And when it stabilizes, we have attained that policy stabilization level. I know that it will throw up. This policy might likely throw up prices in terms of the transaction tax, in terms of the more implementation of the value added tax. But it will get to a point of stabilization. When it stabilizes, the price will have its own level, and we'll all understand that we are all in this common estate together.
Okay.
And when we are in the common estate together, wherever the money goes, we follow it and we monitor whatever it's been achieved, whether for common good or for individual good.
All right.
So that's my own take about the tax law.
All right. Do you think it's going to benefit those in the rural areas in whatever way? I mean, infrastructure. Okay, awesome.
Infrastructure.
All right. Well, thank you so much. I appreciate your time with us, Mr. Wale. Joshua, you are a renowned ICANN expert. I mean, you've attained that place not by mouth. You've also gone through it, the system. You've seen how it works, and you've seen how it operates, and you've also added your voice in countless numerous platforms to seeing that Nigeria gets it right when it comes to the accounts and monetary or fiscal monetary aspects. Thank you so much for having your voice in the discourse this morning.
Thank you very much.
Appreciate. Awesome. Well, this is where we call it a close already. Can't go any further, but wanted you to know that at least you've learned one or twos when it comes to the implementation of the January 1, 2026 tax reforms. The calls are coming through now, but can't take any one, but appreciate your time. 10 o'clock, General Open Banter. Don't go away.